Hello, welcome back to Seewing Yee, and today I'm going to go over the current Redfin headline dated today, 17 July 2023. And before we begin, please hit the like button and subscribe to my YouTube channel after you watch this video. So without further ado, let me share my screen, and we are getting some very important data and trends. I know I say this quite often. So I do my best to bring you weekly housing market updates as well as real estate investing information from my website newsletter. For those of you who wish to subscribe your email to my website below, please do so. By doing it, you will be member of our real estate investing community regardless where you live. And so you have access to great free real estate education, email inbox on a weekly basis. So ultimately, sooner than later, you might be able to become a real estate investor buying rental properties in the most affordable areas in the market in the country. All right. So without further ado, let's go with this headline. Redfin home or selling for near record high. Wait, this word record will creep up for the foreseeable future. And of course, in the past 3 years, we keep hearing record high, record low, this and that, all time, historic, all these buzzwords is happening. So clearly it's a very challenging market. However, if you have a positive frame of mind, any kind of crisis, including the housing market crisis, create tremendous opportunities for primary home buyers and real estate investors like you watching. All right. So let's take a deep dive. Home or selling for near record high. As supplies fall to a new historic low supply inventory. And even then, demand continue to pick up, even with the elevated mortgage rate of what we're seeing close to 7% per mortgage news daily. Go figure, right? So it's very volatility is continuing. However, just have a positive mind and set and should be good to go. Do not be paralyzed all those doom and glooms and fears, negative headlines, which is what's the standard procedure these days. Anyway, so medium's sale price was just 1.5% below its all-time high in June last month. And the average home sold for above its list price for the first time in roughly 1 year. The number of homes for sale fell 15% to an all-time low in June, the biggest decline in 2 years, as elevated mortgage rates kept sellers on the sideline. However, demand is edging up as house hunters get used to the high mortgage rate, also known as the new normal. People are getting used to this high mortgage rate, 6 to 7%, unlike the second half of last year when the spike in interest rate caught everybody off guard. And psychologically, last year, put a lot of people on the sidelines, but many buyers are sick and tired of waiting in the past 9 months. So at the beginning of this year, activity had picked up. So because of a historic low supply inventory, still a lot of demand out there. There are more demand out there than there are sufficient number of homes available for sale. So now you understand, yes, a lot of people are still on the sidelines because they are being priced out of a home purchase. However, there still remain quite a people out there who still qualify and who still are motivated enter the market as we speak in light of the bidding wars and multiple offers going on in many markets in the country. So that in mind, let's go over this chart right here, a record low number of homes for sale. I will share with you later on this video shortly. What does that mean? Record low number of homes for sale combined with an uptick in home buyer demand for housing prices in June. And right now, the median home price is around $426,000. By the way, This median home price is 436,000. Don't quote me exactly. However, so in order to qualify to buy a home for 426K, you need an average income around 80 to $100,000 a year. So it is what it is. So a lot of people, the lower middle class and middle class, are being priced out of the housing market due to the skyrocketing housing price increases in the past 2 years during the pandemic and the higher mortgage rates. Look at this median sales price. The big picture is, look at this. From 2012, the median home sales prices were a little bit over 150K. 10 years later, the median price of home price is around 426,000. But homes more than doubled in price in the past 10 years. Yes, there are some up and down scenarios. In fact, let me give you a picture. You have to look at history. Home prices will always go up in value if you take a long-term perspective, 5 to 10 years in perspective. Yes, we're going through a lot of corrections and sideways trends and what have you. Historically speaking, anyone have a buy and hold perspective, long term, your asset, your precious commodity of a home will always increase in value. That is how wealth is being built on historical basis. So either you are part of the solution or part of the problem. People who are renting will always lose. That's how it is. All right. So that's my very blunt statement. So you make a decision accordingly. See, historically, every 10-year cycle, home prices will always go up, and not fall prey to their short-term vision, to all the volatility going on. We're going through a correction, but over time, things will smooth itself out. We have to have a long-term horizon. That's the mindset we need to have. Okay, so let's go over some additional highlights. Today's housing market is extraordinary. Wow, that's another good buzzword. Extraordinary. What does that mean? Well, however you want to interpret the word extraordinary, but the way the Redfin chief economist Daryl Fairweather interpreted her interpretation is that it feels hot. The housing market feels hot, even though there are very few homes changing hands. And she further said sellers are getting multiple offers if their homes is priced well. More buyers are starting to come out of the woodwork as they get used to the elevated mortgage rates, which is making the market feel even hotter. Think about that. So people are tired of waiting. Is it the new normal? People still need to have a home to live on, and investors are still buying rental properties. Like our investors, that's what we do, are still buying right now in a good affordable markets for cash flow. All right. So while mortgage rates are expected to start gradually declining in response to cooling inflation, they are unlikely to fall enough to bring a critical mass of sellers back to the market anytime soon, meaning housing supply should remain low. When rates do ultimately fall more significantly, prices will likely jump as more buyers move off of the sidelines. Let me share with you my interpretation. Right now, at an elevated mortgage rate of 7%, and yet we're still seeing multiple offers of 5 to 10 offers in many markets, especially those homes are listed right below the median home prices in a particular market. Think about that. If you're wise, if you can afford it, buy a primary home, or if you're a real estate investor, you want to buy a cash flow house, now is the time, because right now there are much less competition. When and if the mortgage rate falls 6.5 or even 6%, maybe toward the end of this year, to see more competition, multiple offers in bidding war will elevate, and you're competing. If you follow the herd mentality, the way I describe it, then you could be subject yourself to more competition. If you wait, if you delay, if you stay on the sidelines, right now. And then when it's time for a signal to, for higher housing activity due to lower mortgage rate, you are competing with a whole bunch of other people overbidding on a house, frenzy, and all chaos gonna break loose just like 2021. You don't want that. So you want to be a contrarian buyer, contrarian investor, okay? And or the opposite direction, not follow the herd mentality. So if you can afford it, whether you're a primary home buyer or you're an investor, you do it now because you have a more opportunity, better negotiation tactics, take advantage of the builders incentive that are available right now, which is amazing. And so take advantage when there's less competition, because if you wait when the competition is fierce later, then the prices will be higher than it is right now. What makes sense? Please comment below whether you agree with my thoughts or not. And also comment below about where you're hearing this from. Tell me about your situation. Are you seeing bidding wars in your market? Tell me the specifics of what's going on in your market. I'm very curious to hear. All right. So let's get back to this article. And yep, that's what's happening. So things are heating up. I feel like bottom right now is the bottom of the market. So don't time the market, because there's always a recipe for disaster. One of the listing agents mentioned that, see, real estate is local, even though I'm reporting this national market information as I always do. But every local market is very hyper-local. And in fact, Redfin used one of the examples here in Rochester, New York, of all places. And this little sub-market, they're seeing homes of bidding wars, home bidded way above list price. And in fact, this Redfin agent in Rochester, New York says, I recently had a rural listing get more than 20 offers. One of the bidders offered to send the sellers on a cruise. Whoa, I like cruising. I don't mind taking that offer. I love cruising. I've done more than 30 cruises in my lifetime, or continuing to do more. My goal is to do more than 100 cruises around the world in the next few years. But the sellers didn't bite. Instead, they went with an offer that was $100,000 over the asking price. I know this example is quite extreme, but yes, there are some samples. Some of the realtors that I know, I live in the San Francisco Bay Area, and one of my friends who's a realtor locally here in San Francisco, he is seeing in San Francisco the highest housing prices. He's sharing some examples. Our homes are typically listed for $1.3 million recently, and it was sold like $200,000 above list price, and there were 50 offers. So I know it's a case by case basis, but throughout the country, you're seeing in certain neighborhoods, you're seeing this kind of case situation similar to 2021. I'm not saying we're going back to 2021, which is a historical year. It will never replicate itself for the rest of our lifetime, in my opinion. But we wouldn't want 2021 over again, when the supply of inventory is our 1.5 months supply, and the mortgage rate at that time was 3%. Now we have a half of the data similar to 2021, in that we have low supply inventory nationwide, around 1.8 months supply. However, the mortgage rate was elevated at 7%. Imagine if the mortgage rate goes below 6%, we may see a massive bidding war, massive multiple offers, and in my opinion, will create unhealthy market. We cannot sustain another double, triple, quadruple digit appreciation in a short period of time, which occur between late 2020 and the entire year 2021 and the first 4 months of 2022. That 18 months time frame was an anomaly. It will never happen again in our lifetime. And I don't want that to happen. We just create chaos, right? Like I mentioned, a healthy market, balanced market is around 5 to 6 months supply of inventory. Look at this. This is trending. Redfin reporting is trending a lot lower. Right now in June 2023, the month of supply inventory is only 1.8. This is prehistorically Jurassic period supply inventory. Goes back thousands of years. Low supply inventory. Virtually no homes for sale in many markets if you think about it. So this is a very disturbing trend. The sellers are locked in at the historically low mortgage rate. Most owners have mortgage rate below 6%. 25% of homeowners have mortgage rate about 3% or even lower. So they are locked in. They're not going to get rid of that 30-year fixed rate mortgage. They refinanced 2 years ago. They have 28 years of mortgage to pay. So they're not going anywhere. They're locked in. So that segment of the seller's market are preventing home prices from going crazy. So that's why we're seeing these automatic. It's very simple. That's one thing you need to learn today, if nothing else, is economics 101. When demand is greater than supply, home prices will increase, which is what we are seeing right now. And very little is going to change that. It takes a lot for supply of inventory